Let's go ahead and get started. So again, welcome everybody. Thank you very much for joining us. This is the third part in our demystifying the board experience. Very excited to have Barbara Ryan join us again. Barbara was one of our panelists when we talked about what you need to do to get on a board. So Barbara, welcome. Thank you very much.
Thank you for being here.
And we also have Jeff Poulton joining us as well. This is the first time Jeff's joined the group, and we're very excited to have Jeff. So Jeff, thank you very much.
Thank you. Nice to be here.
So as a point of background, I'd like to just to give you guys a little bit of background on our two esteemed panelists. Jeff was the CFO for Shire Pharmaceuticals, and Shire was in a very acquisitive mode a few years back. And Jeff, I'm not sure, 4 or 5 different acquisitions you guys made, and you get to look at all sorts of balance sheets and financial statements and try to determine the valuation of these companies. And obviously did some great things. I know Fleming Ornskopf was very, very happy with the growth and the acquisition. So kudos to you. And now you're currently over at Alnylam as their CFO. And so extremely grateful for you taking time out of your day to join us as well. So I wanted to thank you up front before we jump into this.
Thank you, Bob. Appreciate that.
Absolutely. And then Barbara Ryan, as I mentioned, is one of my favorite people. We've been on the Pharmaceutical Executive Advisory Board together for over a decade.
100 years.
And Barbara was the lead sell-side analyst on Wall Street for years, covering large cap pharma companies. And then she went and did some consulting, and currently she is on a couple different boards, and she runs one of my favorite groups in the pharmaceutical industry called Fabulous Pharma Females. She is a tireless advocate for pharmaceutical leaders from a female perspective, and she does a lot of networking to really bring strong female leaders together so they can share experiences. She's got a strong mantra of wanting to give back. So Barbara, thank you very, very much for taking time out of your day again to join us today. So I appreciate it.
Thank you for the invitation. It's good to be here with all of you, and particularly fun to have a conversation with Jeff again.
And on that note, let's transition. So today, what we want to talk about is from a board of directors perspective, how do they look at a pharmaceutical company's financials? And then more importantly, for many of us on this call today, how should we look at a company's financial ledgers to understand risk tolerance, how healthy the company is? If we're looking to join a company, what questions should we ask? And I'm very excited to have Jeff join us, because Jeff has prepared many board books for the board from a CFO perspective, and can walk us through some of those financial questions and different things. So Jeff, please.
Thanks for the intro, Bob. And I think this is one of the maybe very small silver linings of the last 18 months, is that these types of webinars and forums have become much more prevalent. I think they're great. They're simple. It's an easy way to reach a lot of people. So I hope these types of things continue into the future. I am going to talk about the quarterly reporting process, what it takes to get the numbers pulled together, get them reviewed and endorsed, typically by the audit committee of the board, and then ultimately out to the investment community. And I would say what I'm going to talk you through is pretty consistent across the two companies, public companies where I've been CFO, Shire and Alnylam, as Bob mentioned. So hopefully this will give you a flavor for what you could expect if you are able to join a board in the future. So I'll cover 3 sort of primary topics here in the next 10 minutes. One is, who are the key players in that process, in that from financial reporting process? Secondly, what are the reports? When we talk about financial reports, what kind of information are we talking about? And then lastly, the audit committee is really the key governance forum where all this stuff comes together. And so I'll talk a little bit about, what are the things that I do as CFO to organize and structure those meetings so that they're effective and the audit committee gets what they need from an information perspective. So first topic is, who are the key players in the process? It starts with management, which really means me and my team, because we're responsible for preparing the company's financial statements and establishing and maintaining what's called adequate internal controls over financial reporting. That term controls gets used a lot. I think a lot of people don't necessarily know exactly what that means. It's more or less checks and balances that are put into the reporting process to ensure the accuracy and the integrity of that process. Just a sort of a simplistic example, if I'm relying on a system at Alnylam to produce a number that goes into a financial report, and there's a problem with that system for some reason, there needs to be a check in the system that gives us a warning that there's a problem so that we can address and correct the problem and the report gets developed accurately. That's what a control is. The second key player is the independent auditor. And for public companies in the US, generally this means one of the big four public accounting firms, PwC, Ernst & Young, KPMG, or Deloitte. And the auditors are responsible for auditing the company's financial statements and the company's internal controls over financial reporting, which we just talked about. They operate under the oversight of the audit committee. So they're independent of management. They don't work for me. They work alongside me. They really work at the direction of the audit committee. And once per year, they provide an audit opinion on a company's financial results. Again, an audit opinion can be thought of as a certification or a stamp of approval. And what it means is that the reports have been prepared in accordance with generally accepted accounting principles. And that's really important for investors and for the capital markets as a whole, that when an investor picks up a public company report, that they know it's been prepared accurately and that they can use that information in that report to make their investment decisions. And then the last key player in the financial reporting process is the audit committee itself, which is a subcommittee of the board of directors. And the audit committee has an oversight role, and that is oversight of the accounting and reporting processes of the company and the audits of the financial statements of the company. Typically, I would say on most audit committees, there's between 3 and 5 members of that committee, 3 to 5 directors. And the audit committee meetings themselves typically are organized at least quarterly and always right around the time that a company reports its earnings on a quarterly basis, because a lot of the information that gets shared out when the earnings call happens has to be reviewed and endorsed by the audit committee before it's shared. So next topic is, what are the types of information that the audit committee reviews to do its job? As in the oversight capacity that it has. There's 2 types of external reports that are typically reviewed. One is any SEC financial report, and on a quarterly basis, this typically means the 10Q. All of you are probably familiar with what a 10Q looks like. It has the financial information for the quarter, then it has a bunch of explanatory detail about those financial results. And then there's generally speaking, a pretty significant section around risks, sort of risks that may be in place that could impact the company's ability to achieve its sort of future business prospects. The second external report that the committee typically reviews is the earnings release itself. And again, I know that all of you have seen an earnings release for a company that has financial results, and then it has typically a summary of the operating progress that the company's made on a quarterly basis. The committee will review that and provide feedback on that as well. And then lastly is a report that's an internal report. So this isn't something that goes outside the company, but this may be the most important report for the committee in terms of their understanding of what's happening with the business. And that's internal management reporting. So it's a business performance report, and we'll talk a little bit more about that in just a second and what kinds of information I include in that when I update the committee. Okay, so we've covered the key players, we've covered the types of reports that the audit committee reviews. Let's talk now about the audit committee meetings themselves and how those are typically organized and what the key agenda items are as it relates to financial reporting. So I start off every audit committee that we run at Alnylam, and we did it the same way at Shire, with a business update, what I just talked about. So this is my opportunity to spend typically 20 or 30 minutes with the audit committee just talking about the quarter, what happened in the business. And if you think about the audit committee's responsibility, they're touching base with the company quarterly, maybe a little bit more frequently. So they're not in the day-to-day mode of what's going on at the company. So this is incredibly important that they get the right information with the right color about what's happening in the business. And that's what I do during this sort of time period in the audit committee meetings. And it's actually a really good two-way exchange. I mean, they ask a lot of questions, so they make sure they understand what's happening. but they also provide feedback to me. And I'm typically providing them with messaging that I intend to use on the earnings call with investors. So it's a dry run of sorts. And so I get their feedback, which is really useful to me. It allows me to sort of tweak things to make the communication optimal. So what kind of information do I provide? Financial information when I'm doing this? It's actual results for the quarter compared to budget, so we can understand how the company is performing against its operating plan, which typically the audit committee and the board have approved at the start of the year. We'll compare the results for the quarter versus the prior year, so we can understand the trends that are ongoing in the business around top line growth, bottom line profitability, et cetera. And then lastly, we'll compare the actual results for the quarter against Wall Street consensus expectations for the quarter. And this is really important. And Wall Street expectations consensus is the average of all of the sell side analysts that cover Alnylam, as an example, and write research reports on Alnylam. They put out projections for the quarter. So we'll take the average across all of those sell side analysts, and that's what consensus is. And you always want to understand going into a call how your results compare to that, because typically that'll give you a good idea to what the market reaction to those results might be. Either disappointment if you're not meeting those expectations, and you're likely going to see your share price under pressure. Hopefully you're meeting or exceeding, and the results are much better received that way. But we want the board to understand that too, going into the call. The other thing that both at Shire and Alnylam that the committee spent a lot of time on as it relates to performance is understanding top line product sales. So these are both commercial stage companies. They wanted to understand the headwinds, the tailwinds, what's going well, what's not going well. As an example, over the last 12 to 18 months, we've spent a lot of time talking about COVID and the impact that was having on our commercial business. What were we seeing in terms of, patients flow through the healthcare systems? Those are the kinds of conversations that I have with the audit committee. After we've gotten through the quarterly results, the next topic that I cover from a business performance standpoint is typically a reforecast for the year. Where do we think we're going to end the year now that I've just told you about the most recent quarter? And again, we'll compare that to the budget. We'll compare that to the prior year. And then importantly, we'll compare it to consensus. Where does the street think we're going to be, and how do we compare to that? And then lastly, we'll compare that to any financial guidance that we have provided to the market previously. So at the start of the year at Alnylam, as an example, we provided financial guidance to the market on what we expected for product sales and what we expected for operating expenses. And that's our way as a management team of trying to manage the expectations of the street accordingly. So I just completed the second quarter. I did a reforecast for the year, and I compared that to the guidance that I gave at the beginning of the year. And for Alnylam, the good news was we were more confident in the top line. We were able to upgrade our full year guidance for revenues on the call. So we walked through that with the committee. The committee is very interested in understanding our perspective on that. So that's the business update. And again, I think that's super important with the committee. I think that it's important for me as the CFO to have a really good handle on what's going on in the business and being able to articulate that clearly to the committee and answer their questions, because I think that gives the committee the right confidence level that I want them to have in me and the finance organization and the business as a whole. And again, they're not in this thing on a day-to-day basis. And so those interactions that I have, those opportunities that I have to talk about the business are important. The second key item on the agenda at an audit committee meeting is an accounting update. And this is my chief accounting officer. And she'll typically cover a few topics. If there's been any unique transactions that have occurred during the quarter, let's say an acquisition or an out license or a disposal of something, we'll cover the accounting on that for the committee. There's also typically a few areas in our financial results that are, based on a lot of management judgment or are prone to certain risks that the committee likes to keep an eye on quarter after quarter that she will update the committee on. This includes things like inventory balances, accounts receivable balances, are we getting paid? And then lastly, again, a deep drill down on product sales. And for those in this industry, we spend a lot of time talking about gross to net sales deductions, which are based on estimates and judgments a lot of time. And then she'll finish her section presenting the 10Q to the committee, again, which can be a 100-page document. And so one of the things that she'll do is she'll present a reader's guide with that, where she'll highlight, hey, these are the 5 or 6 things that you really need to take a close look at that maybe changes from last quarter, or again, new things that have occurred in the last quarter. And that, again, that's really helpful for the committee to sort of, these are the areas we really want you to focus your attention, and then they'll provide feedback on that. And then she'll also present the draft press release to the committee. This is typically feedback we get from them, less about the numbers and more about the messaging, right? They'll have thoughts on the messaging and the way we're framing certain things. And then, after the meeting, once they've endorsed that, again, 2 days later, we're on the earnings call and we're putting that press release out into the market. So that's the second topic. The last agenda topic for the audit committee is the external auditor. So I talked about that as one of the key players earlier. In the case of Alnylam, that's PwC. So we have the partner on the Alnylam account that spends 10 minutes or so walking through with the committee their progress on reviewing our financial results. And as an auditor, they've got a checklist of things that they have to cover. So they'll walk through that in terms of the status of the review of all those things. They'll highlight any open items. They'll highlight any areas of disagreement if they have any with management. Hopefully there aren't any, or any concerns that they have. And again, this is another really important data input to the board, to the audit committee. Again, they're responsible for overseeing this whole process. This is an independent voice from management that's reviewed management's work, and hopefully, again, is sort of given a thumbs up to that work. And that's, again, important for the confidence of the audit committee. So those are my comments for you, Bob and Barbara, on the financial reporting process.
Yeah, that was excellent. I appreciate it. And before I turn it over to Barbara, I just want to remind the whole group that there will be an iterative question and answer session after Barbara gives her update as well. And there's a Q&A button on the Zoom call. If you have questions that you'd like to ask Jeff or Barbara for the last 20 minutes or so of this call, please type them in there. And then either Al or Elaine will be forwarding those to us. So we will tee you up, put you on camera, and let you ask your questions. So I should have said that up front. Thank you for the reminder, Al. But now I'm going to turn it over to Ms. Barbara Ryan. Barbara?
Thank you, Bob. And thank you, Jeff. No surprise, a very complete and comprehensive review of, the audit committee's role and the CFO and your team's role in the process. I'm not sure I have a ton to add. Maybe I could flip it a little bit and speak from the perspective of one, having been an analyst for 30 years, reading those press releases and making an assessment of the actual results versus both consensus estimates as well as my own. Talk about being a member of 2 audit committees and, being on the other side of Jeff's process. And then maybe Bob shared with me that there are a lot of people who are probably joining this call today who are interested in maybe career changes. There's obviously a ton of money going into biotech, new companies, a high level of innovation happening, and people may want to leave a larger company and go to an emerging biotech company. And that may be associated with a higher level of risk. And so maybe I can talk through some of the things that if you're a non-financial person, you should be very mindful of and looking at. So, starting with Jeff's conversation and being a member of the audit committee, I think that a high level of trust, collaboration, and transparency is imperative between the CFO, his team, and the audit committee, because Jeff's absolutely right. We're charged with signing off on results, and we need the assurance from both the management as well as the auditors on the fact that those numbers are accurate, that there are good practices in place, checks and balances, as Jeff said, and it can be very important to get that independent view also from the external auditor. So, obviously I agree with everything that Jeff said. And our ability to do our job on an audit committee is 100% dependent on the management and the inputs and the external auditors, because as Jeff said, you're not in the day-to-day weeds of the company, although I happen to be on the board of companies that are very, very tiny. And sometimes we are in the day-to-day weeds of the company, even on Sunday nights. So sometimes I know more than I might want to know, but it's all good. So I don't really have a lot to add to, the detail that Jeff shared. As an analyst, there is in the pharmaceutical biotech industry a lot of transparency into revenues because we get audited script data. To Jeff's point, everybody pays a different price. There are a lot of assumptions made about, gross to net, both for companies from accounting standpoints, but then as analysts. And so, we are using those tools in order to develop, revenue forecasts for the independent companies. The other thing, and everyone does this now, but I think I'm so old that I think I might have actually started this, is that we had, I called it a first take, and we basically would have a P&L, which was our numbers, consensus numbers, and then we would rapidly try to get all the numbers out of the press release, put them in that final column so that we could immediately put out to the trading desk and investors what was the quality of the earnings. So, XYZ company beat on the bottom line, but it was all tax rate. This one, missed because they invested a lot more money in R&D. Or, gross margins were a lot better than we thought, gross margins were lower than we thought, revenues were in line. And those things are very, very important to investors in terms of gauging what I just said, the quality of earnings. And the quality of earnings relates to, very strongly to valuation, because there's two components to valuation. There are the earnings, but then there's the multiple that investors will put on those earnings. And that multiple relates to interest rates, growth expectations for the company, but it also largely relates to how confident are investors and analysts that that company is actually going to meet its forecast, either because it always has in the past, or it's got a very consistent business. And so if you look at companies, we'll just take the larger cap companies in a range, even if they may have somewhat similar growth rates, there'll be different multiples. And some of that relates to, I think the net present value is higher here than there because the pipeline's great. And I know that they'll get incremental value out of that. And we will all model that out, 5-10 years. And then, the other is just a confidence level as to, does this management team, know how to execute? So, all of those things, all tie together, as Jeff said. And one important component that, I was the target audience of when I was an analyst, and now am part of the disclosure committee at emerging biotech companies making these decisions, is disclosures and guidance. What kind of guidance are we going to give to the street? And as Jeff said, we had more confidence in our revenues because we had a strong performance in the quarter and we actually increased our guidance. And so, setting guidance and expectations with the street is critical, but words are super important. And once you use a certain word or a certain number, you're going to have to live with it, for better or for worse. And so, I used to, it's sort of like a family member. I covered Merck, Lilly, Pfizer, all these companies for 30 years. It was almost like they were family members. So when Merck pulled Vioxx off the market, the trading desk calls, and the derivative was Pfizer's going to pull Celebrex. And I said, 100%, Pfizer will not pull Celebrex. They will stare it down. They will take a black box label and they'll collect $1.5 billion every year. Thank you very much. Because those were two different companies that behaved in two different ways. And so with guidance, it's the same thing. Some companies are ultra conservative and you feel like, oh, I can take that guidance to the bank unless, something like COVID happens, right? And then, all bets are off and nobody really can predict what's going to happen. And other companies, sort of thought they were being conservative, but they never factored in what could go wrong. It's like the difference between people who are always early or on time versus on late. The ones that are late usually just don't factor in that there will be more traffic almost every time, or something else will go wrong, or you can't find your keys or whatever it is. So, we would also judge companies on that. And that again relates back to valuations. So I think, in terms of the subject of today, I think Jeff did such a great job. It's hard for me to expand on that. And so I thought I might spend a few minutes sharing my thoughts about if you are leaving large cap ABC company and you are going to sexy, exciting, but much more risky ABCD company, and that company is either private and going to go public or is public, what are the things that you should be thinking about? And if you are not a finance person, then you're probably looking at the pipeline, the portfolio, the technology, to assess whether this is something that you think is compelling and you could add value, and this would be a great opportunity. And that's as it should be. But I think that there are three things that you should definitely understand. One is, obviously in our space, everyone invests in technology, products, pipeline, but they also invest in people. So the people you engage yourself are really important. What is the reputation of the people? What is the experience of the people? Have they done this before? Because in our industry, it is never a question of if something goes wrong. It is 100% when it goes wrong, can we square root our way out of it? And what can we do? So that's the people. We've seen the movie before. We can solve this problem. Not all problems are solvable, but you need to have the right experience set and people around the table that, there's no replacement for time in the seat, right? So that's really, really important. Another is, does the company not just have the intellectual resources to manage through, but do they have the financial resources? So what is the cash runway of this potential super exciting, going to make me a multi-million-dollar company opportunity? So, one thing in the biotech field that we talk about all the time, because the companies are serial capital raisers, by definition, they're not generating revenues, they're not earning cash, they're just spending cash. So how much cash are they spending every quarter? How much cash do they have? So what is their cash runway? And one thing to be very mindful is the expression going concern. So Jeff talked about the external auditors. So what you don't want is your external auditors to say that you are not a going concern because the company has less than 12 months of cash runway. You don't want that for a bunch of reasons, most of which are obvious, but one of them, because you're going to have to raise money. What if something goes wrong? Then it's going to be very difficult to raise money. The time to raise money is when you don't need to. Of course, the banks would like to lend to everyone who doesn't need the money. So they don't want to lend to the people who really need the money. So the stock develops this overhang. It's called a financing overhang, because everybody in the market knows that this company is going to have to do a dilutive financing transaction to fund the future milestones, inflection points in their company. So those terms are super important to know. I think if you ever are going to join a company, you have to get to know and meet the Jeff Poultons of the world. Have lunch with the CFO, understand how the company makes its money, plans to make its money, if it doesn't make money, will make money, or how it plans to fund the company. I think it's super important too to look at the investors in the company. Are these investors that in every subsequent deal, participate on a prorated basis, or is there a lot of churn in the shareholder base? Read analyst reports, understand when the company says this, that's actually in sync with what the street thinks. So I was talking to a company about joining their board, and their guidance, their thoughts internally were completely out of sync with the expectations externally. And externally, the street was out in front of its skis. So that there's, an air pocket you're going to hit when you have to reset expectations on the street. So I think understanding how this company is perceived externally by analysts, who are their bankers? Who are they doing business with? Because there's tiers of different banks, and some have better reputations than others. and understand, what the company believes are its most substantial risks. And if you can glean that from external documents as well, what does the street believe are the company's, most substantial risks? And as Jeff said, I think, the issue of controls is super important. And then, there may be, we're a highly regulated industry. So there's always something changing and there's always something threatening to be changed, right? So, understanding how those things would affect this potential company, because they're never ubiquitous. They don't affect all companies, equally. So, I think that would be really my comments in terms of both, interfacing, with Jeff and as an audit committee member, the equivalence as CFO, how the analysts go about what they do, why they give companies buy, sells, or holds. And then, as a potential employee, you owe it to yourself, your career. You're investing not in a portfolio, you're investing your career in one company. So do the homework.
Barbara, I just received, 7, 8, 9 text messages on my phone, people wanting to know if you'll go with them when they interview. So they have, phone a friend type situation here. So I thought that was fantastic. And I took a bunch of notes here and a lot of things that I hadn't thought about. So as always, you got 16 years up here I aspire to have when it comes to the financial piece, and I appreciate it very much.
Jeff was a tough act to follow, but I did that to myself. So,
well, the two of you, holy cow. So very, very excited. What I'd like to do now is have the audience submit those questions. We've got a couple questions that have come in already. I think we've got a question from John Neely. Alan Elaine, do we have John teed up? And is that ready to go? And I'm not sure if it's for Jeff or for Barbara. Al, I think you're on mute. Or if we can just...
John, you should be live now.
Okay. Hey, good afternoon, Jeff and Barbara. Nice to meet you over the screen, and Jeff, it's nice to see you again.
Nice to meet you too.
Yeah, it's been way too long, my friend. Yeah, just a couple of questions, and actually it's for both. When you're looking at maybe potentially joining a privately held company, obviously they're very different than public. First of all, what are the 2 or 3 really nitty-gritty financial questions you should ask, especially about the future? I've had limited experience in that area working for privately held companies, but I've talked to a few and they certainly sell a very rosy picture about the future and going public and that sort of thing. So what are a couple of the questions that you think would be really, really important to know? And then also, how do you know and how do you understand better what the reality of taking a company public would look like in terms of timing and kind of performance thresholds?
Good questions, John. Appreciate that. I knew you'd come with the tough ones. Barbara, you want me to start? You covered, I think, the first one, although this one was more about a private company, but I think some of the things, Barbara, that you covered before, frankly, about sort of things that you would want to look at when you're assessing an opportunity to join a board are the same kinds of things you'd want to do with a private company. You won't have access necessarily to all the same information that you would with a public company. But the thing, I actually joined a private company when I left Shire before I got to Alnylam. So I'll tell you about, I was going to be CFO, not a board member, but I think the way I thought about it is similar to the way a board member would think about it. I think that, I asked about the financial situation of the company. When was the last cash raise and at what valuation was that done, right? Anytime a company raises money, they're at a certain valuation. It's more opaque when it's a private company that's funded. You can get an understanding of how the company values itself based on that. So that was one question. Understanding how much cash they got, what the cash burn is, how long that's going to last until they'll have to raise money again. Understanding the quality of the management is a big part of it. It's hard to do. You try and talk to people that may have, worked with people that are on the management team. The other thing that I think is super important in our industry is it's such an innovation, science-driven industry. And I'm not a scientist, so my ability to look at, something about I can't discern good science from bad science easily. So I go talk to people that I know that are really smart scientifically and say, what do you think about this company and their technology, right? And I get perspectives that are really helpful that way. So I would do all those things if I were either looking to join a private company in management capacity or on a board. I don't know if there's anything you want to add to that.
Yeah, I agree with everything you said. The one other thing that I think is super important to look at is, you've got Series A, B, C, crossover IPO, and some, will accelerate. It's just like in oncology, maybe you go from phase 1 to phase 3, but that's the typical process. It is so hard to get public if you don't have the premier sort of VC crossover round investors in your company. Now, I worked for a company that had one, but not a lot. And we got the company public, but it was hard. I mean, super hard. And I've worked with another company where the market, so you put out, it's just like listing your house. You put a price on it. You want to attract enthusiasm or apathy. So that cover price, ultimately the market's going to decide the pricing of your IPO. And RA or Adage or Fidelity will be, I'm in for 1 million shares at this price. I'm in for 3 million shares at that price. And you put the book together and figure it out. And that's how the price is determined. And so I've worked with companies where the egos on the board might have been at a level where they weren't willing to accept the market price. And in the case that I spoke of, where we did get the company public, and it was the company's third try, nobody liked the price internally. Nobody liked the price, but we had to get the company public. And I always said, because, I started out from the school of hard knocks. So I always said to the CEO, it's not where you start, it's where you finish. Do you know what I mean? We need this money to get to the next level. And it was the best performing IPO of that year in any industry, partly because it was priced so low. But I know another company that never got public because they didn't want to accept where the anchor order was, right? And so, again, I go back to maybe trying to glean an insight from other board members and the management team, how they're looking at that process. Because raising money is hard. It just is. And so, it's not as hard in the last couple of years as it has been, but that too will change. So that would be all I'd add to Jeff's comments.
Thank you.
John, Mr. Neely, you're the best. I hope you're doing great. And I'm looking forward to seeing you soon. So thanks for submitting the question, John. Appreciate it very much.
You got it, Mayor.
Hey, John.
All right. Next question, Mr. Tony Coniglio.
Thanks, Bob and Jeff. Thank you very much. And Barbara, it's nice to connect. Thanks for your comments.
Yeah, great to see you.
Yeah, I have a picky but question that's always kind of intrigued me, and that, Jeff, you alluded to the list of risks.
Yeah.
That the various SEC documents, I find them to be so extensive and theoretical as to not really be very helpful. And I'm sure, I know there's tremendous legal pressures to include every possibility, but I'm just curious your thoughts about really how useful are they? Or are they just sort of something you have to live with as is?
It's a great question. I mean, the way I answer it, and then Barbara, please add your thoughts. I think for people that are really knowledgeable about a particular industry, like biotech, pharma, it's not that useful, right? They already understand the key risks that the businesses face. But the reason the SEC has requirements like this is it's meant for somebody who has no knowledge of of the industry or the company. And they want that individual, if they're going to be, reviewing that public company's reports and making a decision on whether or not to invest or not, they want them to have the full picture, right? And so you got to think about it through that lens. But for a specialist investor, I don't think it's that useful. But for a generalist investor, again, doesn't understand the company or the industry very well, I think there's at least themes in there that could be helpful in terms of understanding the risk associated with that company.
I agree with that. Yeah, I agree. I don't think there's any way to skinny it down, because, then you just leave yourself vulnerable. And at the same time, I think, our group happens to be one where the majority of the investors are sophisticated and knowledgeable about biopharma. And they will weed through there looking for specific things.
Barbara, Jeff, thank you very much. Tony, thank you very much for the question.
Thanks,
Hope
Tony.
you and
Thanks,
Diane
everybody.
are doing great. I appreciate it very much. We've got a question from Jenny Sakamura. Jenny?
Hi, thanks. Thanks so much for this. This has been excellent. Question for Barb. For those of us seeking to become a part of a board, and when we're trying to ensure we're doing our homework, and the company that we're looking at is privately held, what recommendations do you have for researching that if we have no access to the company's financial information?
Well, I would make a condition of the conversation. I think, we all spend our lives building our reputations, right? And, I think that if they're not comfortable sharing that under CDA, then I think that would be a red flag, right? So I guess personally, I recommend I wouldn't talk to a company who wouldn't share that information with me.
Even though they don't have to produce that publicly, private companies have basically the same information that public companies do, and they have auditors that are reviewing it just like public companies do. So they have the information. So I'd ask for it as well. I agree.
No, I think what's the old saying? Gretzky said, you miss 100% of the shots you don't take. If you don't ask for it, they're not going to produce it. And if they really want to have a meaningful conversation with you, they should produce something so you can make an informed decision. I mean, they're trying to bring the best talent around them. So I think it's an excellent question, Jenny, and I appreciate you very much asking that. We've got an anonymous question that came in that I thought was interesting. I'm going to go ahead and tee up. And it I think it probably built off the example you were sharing, Barbara, where you had a possible board position. You looked at their financials and you realized the internal view was not the same as the external view, but they took it a step further. And the question really is, what do you do if you're on a board and suspect something unethical is going on?
See, this was not an unethical situation. It actually was a COVID situation. So, I had a company that I was advising, and there was a lot of energy internally at the company to give explicit guidance. And I was everyone agreed, yep, that's the guidance. And I just looked at everyone and said, are you crazy? Are you crazy? Because you have a one-time mulligan. Nobody knows when we're coming out of this, how you cannot give that guidance, right? So this was a situation where the company wasn't giving revenue guidance. I wasn't advising them. I was just talking to them. And so the street had an expectation of what revenues were going to be because they had to. And they didn't have any information either. So it was all imperfect. And the company wasn't giving guidance was the right call. So at some point, we were going to gain some visibility, and therefore that company would give guidance, like so many others. A lot of companies suspended. I mean, big companies like J&J did suspended guidance, right? So, and that was the right thing to do, because to give guidance presumes that you have some special insight into what's going to happen. So that was not an unethical thing. If it's an unethical thing, then you have to blow the whistle. because you're fiduciary, you're part of that board, and you're not going to be singled out as, well, I did, if you know something, say something.
Who would they say it to, Barbara? I mean, if it's public
Well, I
SEC,
think, in the spirit of trust and all of that, I think you'd have to have an internal conversation to
Yep.
make sure that you have the facts right and there really is something. And if it's something that's curable, right, then you can cure it. But if it's something where, it's kind of outright fraud, again, you don't want to be a part of that. The police pull over the car and you're all in there and somebody robbed a bank. You can't really say, well, I'm not the one who went in the building and actually held the gun.
No, I think it's a great point. Anything else from your perspective, Jeff?
You got to raise your hand, and then there's got to be an investigation, right? I mean, any management team that where the board says, hey, we're concerned about X, Y, and Z and potential fraud, there's going to be a full investigation.
Yeah, that's right. That's a great point. It definitely would be investigated.
And the board insurances would not apply at that point if it's knowingly a fraudulent situation going on, correct?
I'm not sure about that, Bob, in terms of the D&I insurance, whether it would cover a fraudulent situation.
Okay. It was a great question. Thank you, somebody.
Thank you.
Appreciate it very much. There's another question that came in. What if you don't have a finance background? How much of a detriment is that to get a board position?
Look, I think, go ahead, Barb.
You can go. I'll go after you.
I mean, boards bring together people with a variety of different experiences. I mean, we were focused on the audit committee today a lot in terms of financial reporting, and typically those are people that do have financial knowledge and backgrounds. But boards are great because they have people with all sorts of different backgrounds, right? And a lot with don't understand anything about financials, but are brilliant scientists, or they understand the insurance industry or whatever it is. So it's not if you don't have a finance background, it doesn't mean that you can't be considered for a board position.
Yeah, and I agree with Jeff. And there are different kinds of diversity, right? So what you want is diversity in terms of subject matter expertise and experience around the table to make the best decisions. So there's a number of different buckets. Jeff's right. We talked about the finance bucket today, but there's the science R&D bucket. There's the commercial bucket. There's the payer bucket. And so all of those components holistically are important to getting to the right place. And I got some really good advice for those seeking board positions. I would definitely be in the finance bucket, not the science bucket. Okay. So if I want to get on boards, then I have to let people know that, and I have to initiate campaign, because no one's going to tap me on the shoulder and it's just going to happen. So I would be considered for the finance bucket. So I should go to people that I know that know me that are in the finance bucket, whether they're a CFO of a company or on multiple boards. And so I have girlfriends who are CEOs and CFOs who are overboarded, and they're on audit committees. So I go to them because they're getting all the calls, right? It's like the old adage, it's hard to get experience without a job, but it's hard to get a job without experience. And the same applies. Getting your first board is really, really hard. Repotting yourself in your career and pivoting to something else is really, really hard. But there's a first for everything. So, go to the people that are getting those calls, because they are people who can say, you know what, I'm kind of overboarded at this point, but, I would recommend you reach out to, Jeff Poulton or Bob Jansen or anyone, So I think I would add that.
And I think that's exactly right. If you look at the composition of boards out there, you're going to see a lot of scientists, pharma companies, you're going to see a lot of finance folks, commercial folks, et cetera. So, but I do think financial background is going to do nothing but help you understand things and make more educated decisions. And if you are in a commercial role or a scientific role, and you have the opportunity to augment your skill sets and learn more around the finance, that's going to do nothing but help you, from my humble opinion. Now, the final question comes from the lowest common denominator in the group, and that's me. Because Barbara, you said something that really intrigued me, and I took a note here, and I never thought about it before, but I think it's incredibly brilliant and important. And it's about the different tiers of banks and the different tiers of VC or private equity that are part of an investment makeup of a company. Where would somebody like myself or others on the call go to understand where the top tier banks are, the second tier, et cetera, and the same thing with the investment community? If somebody's investing, if Blackstone's investing, what does that mean versus an angel fund investing? I mean, how would we ascertain what A grade investment or banks are versus B or C? Is there a list out there, or where would I
That's
find
a really
that?
good point, and I can't off the top of my head say if there's a list that independently ranks in investment banks in our sector, but I'd be shocked if people don't do that. So I'm sure they exist, and Jeff may know this. And in terms of, I know if you just Google the terms like top biotech investors, crossover, top, biotech, life sciences dedicated, hedge funds, mutual funds, those lists are, readily available. And so, it doesn't, again, mean that if you don't have those names, you're SOL. But life is harder when you don't. So again, the other is, I'm sure that all of you, if you're not finance expert, I mean, I majored in finance and economics, and I learned everything I know about science from doing it for 40 plus years. But I think it's a lot easier to learn the finance if you know the science, because the science is really hard. It's constantly changing. And there are just so many different therapeutic areas. Some of the stuff that's coming to fruition today was science fiction 15 years ago, let's face it. So I'm sure that people who know people in finance, and it's okay to ask them, here are these like top tier investors, are these, and again, it doesn't have to be the top of the top, but there's a list of 30 investors who do the majority of IPOs and follow-on offerings in biotech. And so if you're trafficking with them, you're in a good place. If you're not, it just might be harder.
That's excellent advice. I'm looking for where to hit the easy button and just go find those folks. So Jeff, anything to add?
I think she's right. It's just talking to people in the industry. I think there's a general consensus around kind of who some of those top investors are. And I think if you're asking people, you're going to get a sense of that.
I think another good thing to do is you can actually just Google this or go to Yahoo Finance, pick 5 successful companies in that space and see who their top shareholders are. Then go to their websites. In their investor tab, you will see under stock information, analyst coverage. Look at the analysts who cover the stocks, and their names will be there along with the investment banks.
That's excellent suggestion, as always, Ms. Barbara Ryan. Thank you, Barbara. We're coming up on the end of the hour. I see we've got a few more questions coming in. And I will try to get back to everybody that asked questions after the fact, but I do want to respect everybody's time, Jeff and Barbara's in particular. Really, really appreciate you guys taking time out of your days to share with us. We will try to put together a summary, and this has been recorded. Both Jeff and Barbara have agreed to allow us to share this with folks afterwards. So we'll make this available on the website and can share it with anybody. But again, Jeff, Barbara, you guys were rock stars. Really, really appreciate it very, very much. Thank you for your insights. Thank you for your guidance. And if we can ever reciprocate, please don't ever, hesitate to reach out.
Thank you, Bob.
Bob, thanks for the invitation. Great having a conversation with you, Jeff. Bob, Lane, thanks for your help, and Al the same. And I really enjoyed the conversation.
Bye, everybody. Thanks for listening in.
All right. Have a great Thursday and a nice weekend, everybody. Take care.
Thank you. Bye-bye.
Bye.
Bye-bye.